let's see here. So we have the different coins, and what I'm going to do now is I wrote down the list of them. Let me quickly check the chat here. So what we have is we're going to teach you now to replicate the success. We're going to teach you how to repeat the success and make your wins far outweigh your losses. So we're not talking about portfolio management today. We're going to do that next time. Okay. So what I'm talking about is when it comes to actually trading, use cases, fundamentals. Yes, use case is fundamentals, white papers. That's like in stocks, it's PE ratio. In Forex, it's like the economic calendar. Definitely that's important. And definitely use case is important as fundamentals, because that use case could become less important, obsolete, or replaced by another coin that's faster, stronger, better, newer. Just like nobody uses Netscape Navigator anymore for Internet Explorer or Mozilla or Firefox or Chrome. So what would you say when it comes to actual trading, the technical analysis, what percent would you guys say in the chat constitutes having a good mindset? What percent of trading is mindset? What percent of trading is portfolio management? And what percent would you say is analysis? What do you guys think? There's three. You need to have all three. So what do you think is the most important one? And what do you think is the least important one when it comes to being a successful trader? Okay, 80, 10, 10, 33 each. I like those answers. Mindset 80%. Mindset 80%. So we have overwhelming 80% for mindset. Okay, so wonderful. So I'm actually going to say this. So we actually have 70% that I believe is for mindset. Based on my 27 years experience trading. Okay. And I also believe that it's about 20% portfolio management, which leaves only 10% for analysis. And which also means that no matter what your analysis is, good, bad, ugly, or in between, you can actually trump your analysis by having proper portfolio and risk management. This is also known as money management. Okay. Regardless of what you buy or sell, doesn't matter if you properly structure when you're going to get in your entries and when you're going to get out. There's also your risk reward ratio, like making $3 every time you lose $1. So today, I'm not going to talk about so much the mindset. I'm not going to talk so much about the portfolio management, but do know that they exist and they are 90% of trading. And I will cover those next time for you guys, okay? Included in some, we'll do a technical analysis charting 101 class in 2 weeks, okay? And I'll cover those included with proper mindset, proper portfolio management, as well as the analysis. So today, I'm going to look at the analysis and what percent mindset is discipline. Okay, so you want to be able to not just win, you don't want to profit from a trade. You want to learn how to consistently profit. It's not the same thing. Okay, you can have a strategy that you hit the jackpot, you fluke out, you lucked out. But can you luck out again tomorrow and the next day and all over again next week with a different coin? Can you consistently make money? And having the mindset to know when to cut your losses and walk away rather than chasing, rather than, okay, this is what I mean by mindset. Who can relate? Okay. Type a 1 in the chat if you know anyone that's ever done this. They buy something hoping it goes up, okay, so that they can profit. And what it happens? It drops. Okay. Now, who's ever heard of anyone say this? Well, I'll just hold on to it until I can break even and then I'll sell. Has anyone ever heard anyone say that before? Type a one if that's a common thing you've heard. Okay. And then what happens? It goes even lower. Okay. So mindset is knowing that you're going to place a stop loss where you can be sleeping and the trade will automatically exit you out of that position right there. So your maximum loss is this much. Okay. You avoid this unnecessary loss. And usually people will call me up and they'll say, Robert, what do I do now? Usually I have the same answer. I'll say, you should have listened to me, which was learn trading, learn how to have proper mindset and discipline to not change your stop loss, not to move it lower, to get out consistently with a small loss. And now, if you had done that and you didn't change your mind after you were in the trade, you could go ahead and buy it now and actually profit when it goes from here to here and get out. It would still be lower than where you started, but you made all this profit compared to this tiny loss. That's what I'm talking about, making $3 for every $1 of gain, for $1 of loss for $3 of gain. So the mindset is the emotions of trading, and your job is to learn how to trade not emotionally. Your job is to learn how to be a robot. Your job is to learn how to avoid this whole situation altogether. And how you do that is basically you can see, you can avoid all this trouble if you learn one simple thing, which I'll show you right now. Okay, let's say you have something, it's going up and down, and you want to decide, okay, I will buy it right now. Okay, so you need to understand that you need to have an entry price target. You also need to have two, not one, but two exit price targets. One is, if you are correct, where will you get out? Would that be a good target to exit? Not really, because the price hasn't really reached that level. Where did the price reach? This level. So this would be a more logical price target, more realistic, that we can hit that and not reverse back down like it did before, because markets like to repeat. So don't do something that's unrealistic in terms of having a target. So having the proper target to the upside, as well as having the proper target to the downside in case you're wrong. Because going back to the school example, who's ever heard of someone having a teacher call you up to the front of the class, please work out the problem on the chalkboard, because that's how old fashioned they are, and say, you don't even know how to do the problem yet because you're just learning how to do them. But you don't want to screw up because your whole class is watching and they'll point and laugh and make fun of you if you don't know how to do it correctly. So what do you learn in school is actually not applicable to trading mindset, because it's the opposite of what you should be doing. You learn in school, don't make a mistake, don't make a mistake, don't make a mistake, because they'll laugh at me. So people go into trading with the wrong mindset, thinking, don't make a mistake, don't make a mistake, don't make a mistake. Let's just buy it. It goes up and then it drops and then they don't know what to do. Rather than going in with the mindset that you will make mistakes, because every single trader on the planet makes mistakes, including Warren Buffett, including myself. So now, instead of thinking we can never screw up like the chalkboard, we are now coming in, okay, we're going to make a mistake. What happens when it goes down? We're not going to hold it all the way down. We're going to have a stop loss. We're going to cut our loss quickly when, not if, we have a mistake. Most people, they'll just put all their money in, which is already a mistake with portfolio management. And then instead of trading smaller position sizes, then they will have the wrong mindset of not having, a stop loss that they strictly stick to with discipline, with a trading plan, with a written trading plan on paper that they will not change their mind once they have entered the trade. You need to determine where you will get in and where you will get out and where you will get out, depending if the trade is correct or wrong. It's easier to decide where your exit prices are for both the good and the bad scenario before entering a trade, not after. Because humans will be more emotional decision makers after they've already hauled on to something and it's already started to move. So, trade like a robot, try to make your decision, where will I get in, where will I get out, times two, before I even get in. what that's going to enable you to do is also figure out where you can get in at a better price. For example, we did a entry over here with the blue dot. Maybe instead I'll do this. Okay, so maybe what I'll do is I'll say, instead of getting in right away, right now, randomly at any given moment for anything, maybe I'll try to pinpoint a better opportunity down here. And how that's going to work is I'm going to identify this peak over here. And I'm going to identify this bottom over here. The highest the price has been and the lowest the price has been. And all I'm going to do is I'm going to draw a resistance line over here and a support line over here. And I'll throw in a third one halfway, which is the middle line, the magic line I call, or the magnetic line. I want you to think of an elastic band. If you pull the elastic band too far one way, it'll snap back to the middle. If you pull the elastic the other way too much, what will it do? It'll snap back to the middle. So how many times was the price at the very top? Once. How many times was the price at the bottom? Once or twice. How many times was the price in the middle? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. So where is it more likely to go? The path of least resistance. When you learn how to draw these resistance and supports, it's basically as simple as that. You usually want to see 2 times that the price touches before you establish that that is the resistance line. A minimum of 2 peaks or 2 bottoms. Okay, so the price is moving twice. Okay, so what we can see now is that we're at the middle right now. So why would we buy now if the price can move up just as much as it can go down? We can profit $1 or lose $1. That's not a smart investment. Remember our rule for portfolio management? It was make $3 or $4 for every $1 of potential loss. So does that work with our example down here where we said, let's wait till the price comes down first? It needs to fall first. So we're hoping it drops so that we can then buy it. It's better to do the hoping before you enter the trade, before your money's on the table, before you have skin in the game, than just buying it. Now you're locked in, the money's on the table, you can start losing money. Because what happens if the price doesn't drop? Did we lose anything? No, we simply didn't enter the trade. It's better to miss out on an opportunity than to experience a loss. Remember, we're going to have a lot of these cycles for a lot of different coins. And we're going to be able to identify opportunities always of something that's about to go up when something else is going down. So we are now able to be more picky. And what we can do is say, if the price dropped, let's say it did now drop, we now purchase it. And guess what? We actually have here a profit of potential going all the way to the top here, whereas the loss potential is now much smaller. We can lose a little bit before we can expect the price to bounce and go back towards where? Towards the middle. So that's just a quick example of portfolio management. Mindset is having rules, sticking to them, having a written trading plan. It definitely helps to have a coach or a mentor that can show you their tricks and strategies and tips and tools and resources and mindset, so that you can avoid a lot of the mistakes. Because I've made every single mistake you can possibly think of, and I wish I had someone that had shown me them. I could have avoided unnecessary losses. For example, even this scenario will not work 100% of the time that the price will remain in this channel. It's only about 75, 80% of the time. So what happens if the price does fall out of this channel and drop all the way down? Well, we could have had a stop loss right here. So we would have avoided this whole loss down here. We would have still had a much smaller potential loss than the potential payout is still much bigger. So what that does, let's say you're going to be wrong and you're going to lose this much. Let's say you're wrong a second trade, you lose this much. Let's say you're wrong a third time, fourth time, fifth time, sixth time, seventh times, eighth times, and 9th time. But on the 10th time, our trade makes this much profit. If you combine all of the losses, they will not even add up, okay, to be bigger than our actual trade that actually made money. We were only right 10% of the time. Are we making profit though? So do not confuse being accurate with being profitable. Those are two entirely different things. Okay, you can see here we've still doubled our profit. It actually eliminated all of the losses we've had have been wiped out. Okay, and then some. So we canceled out all the losses on a single trade, and we still have all this profit that we're sitting on with 10% accuracy. So by learning how to make $3 or $4 for losing one, this is why it is more important having the proper portfolio management than it is the actual analysis of what you're buying, if it's going to go up or if it's going to go down, or which direction you're going to profit, or even just learning to profit in both directions is already a huge thing compared to just trading something to go up only.